Good evening, viewers. Tonight's top story focuses on Tesla's unprecedented market turmoil, with former President Trump announcing his intention to purchase Tesla stock amid the company's dramatic downturn. This comes as the electric vehicle giant faces its most challenging period, with shares plummeting 53% since the year's beginning. Tesla, led by Elon Musk, is weathering a perfect storm of challenges. Industry analysts report that European sales have crashed by 70% in early 2023, particularly in Germany and France. This decline coincides with mounting pressure from Trump-era tariffs and Musk's increasingly divisive political statements. The situation worsened when the U.S. Secretary of Commerce's attempted intervention backfired. Rather than boosting confidence, the official's comments about buying Tesla shares triggered further market skepticism. Tesla's market value has dropped from $770 billion to $635 billion, a monthly decline of nearly 20%. The Royal Bank of Canada has reduced Tesla's target price from $220 to $175, citing concerns about competition in China and Europe, along with Musk's Twitter-focused leadership. Multiple factors contribute to this crisis: increasing competition from Chinese and European manufacturers, rising raw material costs, and the Musk effect, the CEO's political statements alienating European consumers. The company's struggles have sparked protests at dealerships nationwide, catching the White House's attention. Tesla has warned the U.S. government about potential harm to American exporters, but these concerns appear ineffective as the stock continues its 9-week losing streak. The question remains whether this represents a temporary market panic or a deeper structural problem that could permanently alter Tesla's position in the global electric vehicle market. Tesla's empire is showing significant cracks as the electric vehicle giant faces mounting challenges in Europe and beyond. Tesla shares plummeted 6% following alarming comments from the trade minister about Elon Musk's leadership risks. This setback is part of a broader crisis that has seen the company's market value plunge by $70 billion in just 3 days between March 14th and 16th. The situation in Europe is particularly dire, with Tesla's sales in Germany, Europe's largest automotive market, dropping by 70% compared to last year. This decline represents a fundamental shift in consumer sentiment and market dynamics. European buyers are increasingly turning away from Tesla, even as the broader electric vehicle market continues to grow. Multiple factors contribute to Tesla's predicament. Trump's tariff policies have increased both production and sales costs in international markets. Meanwhile, Musk's controversial political statements and social media activities have alienated many European consumers and raised concerns among investors. The U.S. Secretary of Commerce's recent statement highlighted growing concern about Musk's leadership, suggesting that his personal political moves are becoming intertwined with Tesla's corporate identity. This poses significant risks to the company's stock performance and stability. Tesla faces intensifying competition from established European automakers like Volkswagen, Renault, and Stellantis, as well as Asian manufacturers. These competitors are rapidly gaining ground in the electric vehicle market, offering alternatives to consumers who may be growing weary of Musk's controversial public persona. The company's declining performance in Europe raises serious questions about Tesla's future growth. With profit margins under pressure from increased logistics costs and tariffs, and European governments increasingly protective of local manufacturers, Tesla's position as the dominant force in electric vehicles appears increasingly vulnerable. Tesla, once the undisputed king of electric vehicles, is experiencing its most severe downturn, with a 53.3% collapse in global sales. The EV giant's troubles are particularly pronounced in Europe, where multiple challenges threaten its market dominance. Chinese manufacturers BYD and NIO are aggressively entering European markets, particularly in Germany and Norway. Despite Tesla's Giga Berlin plant investment, the company is losing ground to competitors who benefit from local incentives and competitive pricing. Tesla's stock value, previously inflated based on future growth potential, is facing a reality check. Market analysts question whether the bubble is bursting for Tesla shares, which were valued as a technology company rather than an automotive manufacturer. Elon Musk's controversial social media presence and political disagreements with European leaders have damaged the brand's reputation. His divided attention between Tesla and Twitter has raised concerns about leadership, while senior executive departures have destabilized management. The Berlin Gigafactory faces production delays, labor issues, and regulatory challenges. Musk's confrontational approach with EU institutions has alienated key political figures, complicating operations. Investors are monitoring Tesla's upcoming delivery and revenue statements. If the European downturn persists, global sales targets may be unattainable. While Tesla might redirect production to other markets, rising competition in China offers little relief. The U.S. Secretary of Commerce's commentary on Tesla shares has drawn criticism as potential market interference, with analysts suggesting such statements could backfire. As Tesla grapples with production disruptions and rising costs, its premium-priced models are losing appeal. The company's position as the innovative leader in the EV sector is no longer secure, marking a critical point in Tesla's journey. Tesla's golden age appears to be waning as multiple challenges create unprecedented pressure on the electric vehicle giant. The company's stock has plummeted 53% year-to-date, raising questions about its future trajectory and market leadership. Elon Musk, once celebrated as a visionary leader, now faces a perfect storm of adversities. The company's European sales have nosedived despite overall growth in the electric vehicle market, suggesting a shift in consumer preferences. German buyers increasingly view the brand as overpriced and undersupported in terms of service infrastructure. The situation is complicated by Musk's controversial social media presence and political statements, which have strained relationships with European leaders and alienated customers. Trump's existing and proposed tariff measures are creating barriers for Tesla's export capabilities. Market analysts are divided on Tesla's future prospects. While some predict the current decline may continue, others suggest this could be temporary before an eventual recovery. The upcoming sales data and financial results will be crucial indicators of Tesla's ability to navigate these challenges. The company faces multiple issues: Trump's tariffs, European market losses, aggressive competition from rivals, rising Chinese manufacturers, and global economic headwinds. Institutional investors show growing wariness of Tesla's volatility, while short-term speculators engage in short selling. Tesla's historical resilience through innovation offers a potential pathway to recovery. However, the current challenges present a uniquely difficult scenario. To regain market confidence, Tesla needs to execute several moves, successfully launching the Cybertruck, implementing new battery technology, and potentially reining in Musk's social media activities. The market watches closely as Tesla attempts to navigate these headwinds. The coming months will determine whether the company can maintain its position as a leading electric vehicle manufacturer, or if its dominance is ending. Good evening, viewers. Tonight we're diving into a story about Tesla, once Wall Street's darling, now facing its most challenging chapter, with its stock plummeting 53% this year. The question on everyone's mind: is this the beginning of the end for Elon Musk's electric vehicle empire? Let's break down the facts. Major institutional players are jumping ship. The Royal Bank of Canada and Morgan Stanley have downgraded Tesla's stock, and the U.S. Secretary of Commerce warns investors to steer clear. We're seeing hundreds of billions in market value vanishing. What's driving this decline? It's a perfect storm. The Trump tariff effect makes Tesla's global supply chain more expensive. In Europe, things have deteriorated. German sales have collapsed by 70%, and the French market isn't looking better, with consumers turning away from the brand. Musk's political commentary hasn't helped. His social media presence and public statements have alienated many European consumers in one of Tesla's crucial markets. Add the economic recession, and you've got serious trouble. The company faces multiple challenges. They must navigate the China-US trade war, rebuild their European reputation, and manage Musk's controversial public image. Can Tesla bounce back? Will they emerge stronger? Or is this the beginning of a long-term decline for what was once the world's most valuable automotive company? Analysts suggest waiting for next quarter's results before final judgments. Strong numbers might shift momentum back. Disappointing results could drive more investors away. Share your thoughts below. Do you think Tesla can recover? Don't forget to subscribe and like for more market analysis. This is your trusted news source, keeping you informed on the stories that matter.